I gave up backtesting trades very early on in my career. Why? Well, I came to a conclusion backtesting doesn't work. Now, I'm sure many of you are thinking, well, backtesting does work, and it can. It requires a huge amount of effort. It also requires a huge amount of knowledge about what exactly you should be backtesting and what information go into this. I'm going to explore backtesting in a little bit more detail, and also the use of statistics in trading on the 9th of April in a special one-off live session. And what I'm going to particularly look at is two things that affect your ability to backtest and provide you with tradable results. One of those is having too many variables. When I started, the first thing that I went and backtested, because I heard about this as a trade idea, I thought, right, I'm going to go and test this. I started testing 5-minute candlesticks, and I've got pages and pages of handwritten notes on 5-minute candlesticks and whether they worked or didn't. The difficulty you have with this is, one, how do you define whether the trade works to start with? That's one part of a backtest, and you can actually quantify that. But the other thing is variables. You look at just a 5-minute candle. This doesn't take into account other time frames. Is that a 5-minute candle that lines up with a 60-minute reference point? Is this a 5-minute candle on a certain type of day in a market that is uptrending, downtrending? Because a shooting star candle will only work in certain market environments, in certain situations. And that's where the problem lies, that you get a backtest that says, well, this doesn't really work, when actually it's a perfectly valid signal and very tradable in the right circumstances. So the other reason that people will struggle with backtesting is what they do is to overcome this, they then try and find the right circumstances and end up with too much complexity. Complexity is one of the things that really impacts traders' ability to trade. You've heard of analysis paralysis. It's the same kind of concept. The overly complex ideas, a 5-minute shooting star candle or a ascending wedge formation, is something you can backtest, but then you start adding complexity. It's got to happen on this day following this and this and this and this and this, and all of those little steps along the way are providing you links. Any one of those links breaks, this whole idea goes away. So what you end up with there is, by adding complexity, seemingly a greater deal of certainty, what you're doing is you're providing yourself with the perfect environment to just not find trades, not find enough data, because there's not enough things that match that level of complexity, that sequence of events. That's the difficulty of backtesting. Now, there are far more effective ways to get on in your trading, and one of those ways is what I call forward testing. This is what I'll be discussing further on the 9th of April. How do you forward test stuff? How do you look at things in real time? And then how do you better use that to quickly accelerate your growth as a trader? Like I said, 9th of April, click on the link, sign up, and I will see you all then.